know I try to be a good man. I always give it my best. But truth be told, someday I want to go to the wild, wild west.
And now, live from our Smokehouse studio, it's time for Real Estate Jerky. All your real estate questions answered by our provocatively lean expert host, Ed Parcaut, MBA, veteran, and president of Lending for Living. And today's special expert guest, real estate advice you won't find anywhere else. Plenty to chew on, starting now.
Good afternoon. It's great to be here with my guests, Pam Shelton-Allen, State Farm Insurance, Modesto, California, and our guest realtor. That's right, Realtor, right?
Realtor.
Yeah, Betsy Hurst-Younger, Century 21 Wildwood Properties in Twain Harte, California. How you doing, ladies?
I'm
Wonderful.
doing great.
Yeah.
Can we hear everybody okay in there? All right, we're good to go. All right, our number one goal on Real Estate Jerky is to help you, our listeners, learn about home ownership and how you can take advantage of the simplest way to build personal wealth in America, which is through home ownership. Today, we're talking about the least expensive way you can protect your investment in your home and your family, which is life insurance. So, Pam, thanks for coming back on. I think you were here 6-8 months ago when we had the Paradise Fire right after that, and you came on, you were talking about some of the issues that people have when they have policies and what they should do. And luckily, a lot of that fire is behind us, but I guess we have one currently going, right? Is that correct?
Yes.
We had
Anybody
one
can speak.
within the last few days.
Yes.
Yeah. Rumsey fire.
And how big is that one?
I haven't heard. It was only 20% contained the last time.
And no buildings or structures been really affected, right?
No homes.
No.
Okay. How long will it take not having a fire for policies to come back to normal? Is there a guideline for that? That's just a question.
Define having a policy.
You mean like I know in the past, because of the rim fire and other fires we have, it's harder to get insurance, or it has been harder to get insurance in certain areas.
It can be. It depends on the company and the carrier. And sometimes, especially when there's an active fire, there's a moratorium placed, which means there's no policy changes, there's no new policies being written, everything's frozen. So until they fully get the fire contained or completely put out, then again, depending upon the carrier, they'll release the moratorium. And then sometimes you'll have some carriers completely withdraw from an area.
Right. And we've had a lot of that over the last few years, correct?
Yeah.
And then, so when would you possibly see the carriers come back? Is there usually a guideline or not, or just they never come back, or they wait 10 years? Or
it's going to depend upon the carrier and what they do. And a lot of times, when there are changes, they have to file with the Department of Insurance.
Okay. Betsy, I guess you used to work in the insurance industry back in the day?
Back in the day, I was the administrator for Metropolitan Life Insurance in San Luis Obispo when I was in college.
And that was when they had carbon paper, right?
It was when we had the...
I'm not dating you, because I remember getting in the Navy and we used carbon paper on typewriters, so,
We used to have to back up the computer, and it had a big box kind of thing we had to pull out and put another one back in, and waited for it to do it. And they had their own rooms. Computers had their own rooms.
Oh, yeah.
This was in 1984.
And those rooms of computers, what we have in our laptops now.
Exactly.
Or my Surface, the computing power.
Crazy.
Yeah, I remember when I got in this industry, to get a credit report, we had to have it faxed to us. We'd order it, and then it would fax over. And now we do it in seconds.
Yeah.
Yeah. Changes,
Technology,
huh?
yeah.
Well, that was also back when you bought a house and you initialed about 10 spots on the contract. And
It was one page, right?
Yeah,
One page.
exactly. Yeah, exactly.
Not a 10-page plus hundreds of other little additional disclosures, right?
Right.
Yeah.
That's right. So that fire we were just talking about,
Yeah.
it's up in Yolo County, and it says it's 50% contained.
That's good.
Yeah.
That's pretty
good.
fast.
That's good.
Yeah, not like the ones we've had where they've taken months to get contained.
2,220 acres burned.
Yeah, but it's just raw land, right? Nothing.
I don't know. Yeah.
Yeah, I mean, not that that's a good thing. I'm just saying it's better than.
It's destroyed non-residential structures.
Yeah.
Yeah.
It's better than loss of lives and loss
Yes,
of property.
yes.
Absolutely.
But they also said a lot of that was because people really did evacuate when they told them they need to evacuate. And it made the firefighters' job a lot easier.
Oh, so they did evacuate this
Oh,
time.
yeah.
Oh, that's good.
Good.
That's good. All right. We're going to take a moment here to explain to our listeners that we plan, show topics and guest months in advance. And I want to call for a moment of silence. We had a gentleman on a few months ago. It was Mike Coelho of Airman Heating and Cooling, and he had passed away. And I want to give our deepest condolences. I can't even talk today, to Mike's wife and Anna, children, grandchildren, friends, and clients, because we'll miss him. Great guy, great company. So let's have a moment of silence. All right. So, Pam, let's talk about life insurance. And always Marlene sets up a ton of questions for me to ask. So I know from when I deal with people, help them get a home, one of the first things I want them to do is go get some life insurance in case something happens to one of the people in the family, and that then they can keep staying in the home, or they can do whatever they want because they have that life insurance policy. So I think it's a good idea for homeowners, actually a good idea for a lot of people. Where do you want to start? You want to talk about how they protect family? How do you want to do this? Because it's your show today.
Yeah, it's an open-ended question as far as life insurance is concerned, because it truly is something that should be tailored to the individual. Purchasing a home is often a trigger for someone to really think, boy, I should get life insurance. And they definitely should, because typically their home is going to be one of the biggest investments they ever have in their entire life. So you want to make sure that that investment is protected, so that should anything happen to you, your family can continue to live in the home as you want. I mean, typically most people are going to want their family to continue on in some sort of semblance of normal lifestyle if something devastating were to happen. So we usually will meet with the client and tailor a policy to fit their needs, and that could be, obviously covering the mortgage, and then beyond that. And again, it's just going to depend upon what they need. And there's a lot of complexities that go into that formula and the calculation as to how we determine exactly how much is appropriate and what sort of policy is appropriate for them.
Now, in the past, people have gotten life insurance policies, and then they have it to where it pays off the house, right? So they have some of those. I'm not for that. I'm more for getting a life insurance policy and gives it to the people who are left to do what they want.
1,000%. I agree. And so the type of policy that you're talking about would be a mortgage policy or mortgage life. And
well, right, they have those, but I'm also talking. Some people have actually got actual life insurance policies, and you in there say, I want to pay off the mortgage with it.
Right.
Yeah.
And I completely agree, because especially if you hold it for a long period of time, and obviously if you're paying on the home for 20, 30 years, the beginning balance is not the same as it was at the end. And you want the benefit amount to go to your beneficiaries, and then the beneficiaries are subject to change. I mean, you could start out, I hate to say this, but you could start out with one spouse, and then 10 years later, that spouse is no longer there.
Been there. Been there. Done that.
Been there, done that myself.
Yep.
Or you
Me
could
three.
start,
Or your kids grew up, and you change it to your children.
That's the other thing, is that when you have your children, you don't want to designate your children as beneficiaries, because you don't want the courts to get involved. So there's ways to structure it to make sure that your family is protected, and the proceeds go to the person, not the entity, but to the person that you want it to go to.
Or the trust, right?
Correct, or their trust. Exactly.
Because I know we had a trust attorney on a while back, and I'm really into people getting a trust, setting that up so everything's protected, so that you don't have to pay the state to get your money.
Absolutely.
Right? Go through probate and all that good stuff.
And then updating it when you have a change in your life.
Well, that's the biggest thing. We still have to do that, don't we?
Yeah.
We both looked at each other and we're like, wow, we need to update our trust. It's been a while.
Yeah, you need to meet with the professionals in your life that deal with the financial aspects of your life, be it your attorney, your insurance person, your CPA. Meet with them on a regular basis and make sure that everything is updated, because I've run across life policies that come across my desk either through transfers or a new client that comes in, and they end up having old beneficiaries. It could be an ex-spouse that they have on the policy. And you want to make sure that you keep that updated, because a lot of times you don't want the ex-spouse to receive the proceeds.
No, because your new spouse will get upset.
Yeah.
Right.
Right.
Or the children. Or
Well, yeah, you definitely. All right, so we're going to have to go to a break, so we'll pick this up when we get back. Hey, we'll be right back after this break. Listeners, if you have any questions, You can dial pound 250, say the keyword Real Estate Jerky, and you'll get into us. If we're happen not to be here and it's after hours, because that's 24/7, you will be able to leave a voicemail, and we'll talk to you when we get back. All right, so when we come back, where do you want to take off? Go from? How about you, Bets? What do you want to do? Why don't you inject
We need
something?
to throw her some questions.
Throw me a question.
Well, I did the first question. Tell me about life insurance. That was the first question. What does life insurance protect a family? The next one is what are tax
Hey,
advantages?
Ed, can you turn Pam's mic up just a little bit more? Thank you.
I did,
Thank you.
because you keep backing up.
Now,
You look at her and you
I heard myself do that. I actually heard it. It's like, ah.
All right, so I'll bring us back, and then Betsy wants to ask her one of those first questions of the 5. You good?
I'm going to ask her what types of life insurance there are.
Absolutely. That's a good one.
That'll work. All right.
Leaving the bull behind. It's Real Estate Jerky.
It's still
And we're back. For those of you just turning in, I'm Ed Parcaut, mortgage advisor with Lending for Living, your host, along with my guest, Pam Shelton-Allen, State Farm Insurance, and Realtor Betsy Hurst-Younger of Century 21 Wildwood Properties in Twain Harte. All right, let's get going.
You know what, Pam? I was just wondering how things might have changed in the last 30 years. What types of life insurance do they still have out there?
Oh, boy. Well, most people are only familiar with the general terms. So, for example, a term policy versus a permanent policy. And within that spectrum, there's a number of policies that you can get. So you can get term with a return of premium rider, which is fabulous because you pay on the policy for assuming you pay on the policy for the entire term, and then you get all of your money back at the end, assuming, of course, that you're still here. And then you can go all the way up to a universal life policy. And yes, they still have those policies that you can just dump money into and make it as big and as powerful as you want. And then, so between that return of premium policy and the universal life policy, there's a number of other permanent policies, whole life policies that are cash accruing, dividend accruing within that spectrum.
I know that I started out with a $25,000 life insurance policy when I was in my 20s, and because I chose the dividends to purchase additional insurance, it's now worth over $36,000.
Mm-hmm.
So, and the premiums are low because I started young.
Right. And that's one of the things that people don't seem to understand either, because they're hesitant. They think that they're young and they don't need it, but it really is your health that's going to help you purchase the policy. You're going to qualify at a much cheaper rate when you are young and healthy, and you can buy a bigger, more robust policy that's going to last for your entire life if you do it when you're young. If you wait until you're wise enough to look back in the rearview mirror and go, oh, crap, I should have done that when I was young, then the premiums are going to be much higher.
And you'll have to do like a term policy because you can't do a whole life at that time or one of those because it's too expensive. Right?
Yeah. And when you're handed what the premium would be for the policy that you really want, a lot of people just choke. They just can't afford the premium.
I know back in 04, 05, 06, a lot of people were taking money out of their houses, like $200,000, and buying a policy. I don't know if it was a whole life or a universal life policy, so that they could actually get a retirement amount out of that for perpetual. Is that still available? Do they do stuff like that? Do you recommend that? I don't mean taking the money out of the house. I'm just saying that.
No. I've heard of that strategy before. I've actually read a book on it before. I personally don't believe that that's a wise strategy, especially when you look over the long term. Let your house work for you over the long term. When you look at the investment that your real estate is, it's enough of an investment in and of itself that you should not pull cash out of it to go and do something else. You could end up in a bind.
Right.
And that's not really what you want to do. There are other ways to structure your investments.
Right.
And so isn't it fairly easy if someone does pass away to be able to collect that life insurance?
Yes, it can be. It can be very simple, and
It's not taxable?
that's exactly correct. That's the other benefit, is it's not taxable. Benefit to the beneficiaries is the tax exempt or the tax free status of the life insurance. And again, you want to make sure that it's structured correctly, which why you want to meet with a professional who understands the ins and outs of life insurance and why you should get it. And one of my pet peeves, and we were talking about this before the show, is the comment that you get back about, I don't need it because I have coverage through work. And that's one of my pet peeves, because the coverage through work is only good as long as you're employed there. And then should something happen, let's hope and pray that you are employed there, that the policy is in force and is fully payable to your beneficiaries if you happen to be employed when you pass away. But I've had in my own agency instances where someone was diagnosed with stage 4 colon cancer, and the only policy he had was through work. And by the time he fought, went through the chemotherapy, went through all of that, battled the cancer, he ended up losing his job, losing all of his benefits. And by the time he finally lost his battle with cancer, there was no benefits. There was nothing left.
Wow. Did not know that.
So what would be the average price of maybe a $100,000 policy for someone who's age 30?
Age 30, $100,000 20-year term policy can often run them under $20 a month.
Okay.
But is that enough?
My opinion, no.
I'm asking your opinion. That's
No,
why you're on the,
it's
on
not
the show.
enough. No. $100,000.
I don't have cue cards over here to read this thing.
$100,000 is better than nothing.
Right.
But is it enough? No, it's not. It's not enough to pay off the mortgage. It's not enough to replace your income. It's not enough to take care of your family, your children. No, it's not enough.
Now, what's the rule for getting how much insurance you can get? What's the maximum you get? Is there like a 3 times your income? I mean, what is there a number or not? I'm just people are going to have these questions.
Right.
Yeah. A lot of that is going to be subject to underwriting, and the max they can get, most people won't do that. They won't pay the premium for that.
For like a $5 million policy or $10 million policy.
Right.
Because it's going to be very expensive.
Right. Well, and again, it depends. It depends upon underwriting. It depends upon your health. It depends upon a lot of things. It depends upon your income, what you have to protect, and why you want the money.
Well, and they have different stipulations of questions on the application about whether or not you skydive,
Correct.
race cars,
scuba dive,
race motorcycles,
vehicle racing,
Yeah.
scuba diving.
In the military? Or is that one not there anymore?
That one's not there.
Really?
That one's not
I don't
there.
think they can discriminate against a
No.
veteran.
Really? They used to be able
Protecting
to.
our country.
When I was in, they were. They couldn't
No
get-
discrimination allowed.
yeah. Wow.
Right.
I need a policy for my son.
Come on in. You know, speaking of that, we talked about the age thing,
Right.
and I am a huge proponent of it, and I'm a huge proponent of making sure that your children get coverage. So when my grandson was born, he was 10 days old, I bought a policy for him because I want to make sure that I start him off right. So by the time he's 20, that policy will be paid up. It's cash accruing. It's working silently in the background for him. It's got a guaranteed insurability clause, so no matter what happens in his life, he can get more insurance with no medical underwriting. And it's got a waiver of premium for disability.
How much does something like that run?
His policy, I paid for it for the whole year. It was $200 and something for the whole year.
And that'll stay the same?
Yeah.
And so you just pay $200 and something every year for the rest
Every
of
year for 20 years, not for the rest of his life.
Well, 20 years.
This is a form of a permanent policy, a whole life policy. It's called a 20 pay. So think of it like a mortgage. You're paying on it for 20 years. At the end of the 20 years, it's completely paid up. It continues to build cash value, just like the equity in your home. It's fully paid up. It will continue to work for him in the background. And I love it. They're fabulous policies.
And what does that pay out?
The benefit amount starts at $50,000,
Okay.
but just like Betsy was saying, that you're paying on it, the dividends continue to accrue. It buys little baby policies as it continues to go, and so the benefit amount will continue to grow as he does.
So if he's like 16 years old, what's that year? Do you have to get your
I'd
policy
have to
out?
run. Yeah, I'm sorry. I'd have to.
That's
I'm
okay.
good with numbers, but not that good.
Well, and if he needed money, he could borrow out
Yes.
money and take a loan.
Yeah. Grandma would say no, but yes,
Yeah.
he could.
Who owns the policy? Grandma?
Grandma did. Grandma just signed it over to Mom because Mom now wants to pay for it, which means Grandma will probably take out another one that Grandma owns.
Okay. Sounds like a good policy.
I love them. Absolutely love them.
I don't think we hear enough about those.
No, and Betsy was asking me too about, the different types of policies and terms policies. So one of the benefits on a term policy is the convertibility option. So I had a policy, Betsy was telling me she has a term policy, and I had one that last year I converted $100,000 of it to a permanent policy, because I was taking a look at my overall situation, and I knew that I want that much more permanent insurance to last me for the rest of my life. So I converted $100,000 of that, and I still have the remaining amount of the term policy left. So I have $150,000 left on my term policy. That didn't go anywhere because I didn't want it to.
So say you had $1 million term policy. Can you do the same thing on one of those? Or you just have to pay more for it? What is it normally?
It's going to depend on when you convert.
So,
and it's going
so
to,
the older you are and the heavier you are, the worse the time to convert it.
Yeah. The older, but here's the thing though. Let's say that you do have that $1 million term policy and you've developed some sort of incurable disease and you're not eligible to do that anymore. Convert it to permanent with no medical underwriting.
Oh, really? Wow.
Fabulous.
It's funny. 20 years ago, when I got my 20-year term policy, I really thought that $250,000 would help my children go to college. And now I've had the third one now going through college, and if someone that had happened to me, I don't know that would have actually paid for them all three to go to college.
I have
community.
I have a client right now who's looking at paying for his girl each one $80,000 at least, because it's at least $20,000 a year minimum for where he's going, just for the tuition and not counting books and everything else. So.
Yeah.
And
board.
Yeah. So instead of actually paying for student loans and stuff, they're just taking the cash out of their house right now because it's just easier for them, and they know they're done. They're like, here it is, we're done. And then if they don't use it, then it comes back. So we've got about a minute before we go to break.
Well, I was wondering, what's the best example of good coming from a life insurance policy?
Well, that's probably going to take more than a minute, right?
Oh, absolutely.
All right, so let's go early. Let's go early to break, and we'll extend the next segment, okay?
Okay.
All right, so we got to head out to break. As a veteran myself, I think it's very important to support members of our military. We always honor veteran business owners during the show. If you're a vet and you know a vet that could use some free advertising, message us their name and number to pound 250. And that, again, that's pound 250 from your cell, you keyword Real Estate Jerky, and we'll take it from there. I think this week I'll do that when we get back. All right, thank you. Sorry, I thought I had to tell him.
Love this. Yes, Andy's confirmed. Her Cal comfort windows.
What'd you say?
I said, love this.
Yeah.
Yeah.
You can take them off.
Really good. Really good. Sounds amazing. And you're going in all the right directions. And the stories are good. Yes. Yes.
Yeah, they're real. I've had a bazillion of them.
I know you do. I know you do. Because you're so good at selling life insurance. You are. On top of the PNC, you're really good. Are you really?
Absolutely.
That doesn't surprise me. Because she had the balls to say, hey, when my daughter came and lived with me and all her kids, and she knew that I was going to end up with like all the...
Yeah.
She says, you need to get insurance on her. And I went, you're right, I still do, so I still have it.
Yeah.
Because I'm still...
Well, that's because I love you, and I'm looking at you going, if anything happens to her, you're screwed.
My daughter was 405 pounds when they came to live with me, and there was no way anybody was going to insure her.
Oh, Lord.
She's had gastric bypass since, but it has inched her way up. Oh yeah, when we were at the hospital when she was on bed rest and 405 pounds and pregnant,
Beth went on bed rest, but she was
I went on, you better do something because I'm going to end up being their mom. I'm acting like I'm talking on this.
But Beth, I am.
Okay, so we're being recorded right now? Okay.
That's all right.
She's a lot healthier now.
Oh,
And the kids are 6.5 and 8.5.
Don't forget, when we come back, that's you. And you're not bringing us back, but you're talking right after.
But we're going to
Well, you guys sound
address
great.
that one question.
Do you want to address that one, Kristen, or
Yeah, we
to go?
should.
I think you should.
Yeah.
It's
And then
Because
I'll-
we'll have that minute, and then we'll
Yes,
go
yeah,
into.
take
Then you
the
can
minute.
take over.
Yeah.
All right. Did you want to use that on the end?
You went a little longer on the first one, so it kind of evened out.
Always my fault,
This
isn't it?
example of good coming from life insurance. And I don't exactly
Indeed,
mean the fact
indeed.
that I inherited Gold Wing trike because that's what my stepdad bought with my mom's life insurance. And then he had a stroke and couldn't drive it. So I have a Gold Wing trike.
Ready?
Because of my mom's life insurance.
Oh my God.
Yes.
12-minute segment.
long-lasting real estate jerky is back on Power Talk 1360 KFIV.
And we're back. I'm here with my guest, Pam Shelton-Allen, State Farm Insurance, and Realtor Betsy Hurst-Younger from Century 21 Wildwood Properties in Twain Harte. We've been talking about life insurance with Pam, and I think I want to pick up where we left off right before we're going out. What was that question? What was it? What were we going?
It was, what's the example of the good that comes from having life insurance?
You got an hour?
No. We only have about a half hour left.
Okay. So the obvious benefit or the obvious good is the fact that you're protecting your family. I mean, that for me, I'm a huge family person. So for me, that really, truly is the biggest benefit is you're protecting your family. And if you think about it, and this is where truly people should sit down and look themselves in the mirror, get a pad of paper out and ask yourself this question. If I were not here today, what would I want then? How would I want things to play out? What do I want paid off? How do I want my family to live? And you start answering those questions. And then, I hate to say it, but there is a dollar value to that. Every single one of those answers either has an action assigned to it or a dollar value to it. So the good is that that list that you created gets taken care of. Your income gets replaced. Your house gets paid off. Your debts get paid off. You pay for college. You pay for your final expenses. You help your family. You help the people that you love. That's the number one thing for me.
Well, and you share that with someone and you tell them where you've hidden that in the list.
Absolutely. Absolutely. And, you know, when we talked about a trust earlier, and that's the benefit of a trust because you can spell those things out when you get that pad of paper and you write that list. You can spell those things out. So we were talking earlier, too, about there's all kinds of different things. There's grandparents who end up inheriting grandchildren. Mm-hmm. And we don't want that to happen, but then you end up with, well, do the grandparents have the money to be able to raise those kids? Do they have to fight for custody? If they have to fight for custody, do they have the money to fight for custody? You really have to think all of those things out if you're not here today. And I know a lot of people think that I'm young, nothing's going to happen to me. That's not guaranteed. Life isn't guaranteed. Tomorrow's not guaranteed. Figure it out. Write it out. You're not too young.
And this is the stuff people don't want to think about. It's when we had the trust show, same thing. He's like, people just don't want to look at what happens and plan for the future in case something happens. They just want to forget about it.
Right. Yeah. My stepfather had a stroke a few years ago, and I'm still looking for the notepad that he told me he wrote it on. Yeah.
That's.
Luckily, though, I was able to become power of attorney before that happened, and I got on his bank accounts.
That's
so now
awesome.
I have to handle everything.
Yeah. And Ed knows this, and Marlene knows it, is that I was widowed unexpectedly on my honeymoon 8 years ago. And that I was always passionate about life insurance before and pre-planning and making sure that you get things taken care of. But I will tell you that experience changed my life because I did go back to work and sit down and exactly like I said, I got out the pad of paper and I asked myself, what if it was you? You think you have your stuff together, Pam, but do you really? Mm-hmm. And so I created the list and I made sure that all my ducks were in a row so that my family would be taken care of. So life, and what about, there was the accident in Ceres where a young woman and her kids, remember the car plowed through, it was an apartment complex or a house?
Yeah.
Okay. Never in a million years would they expect that she's just suddenly gone.
Right.
Is she protected? Is her spouse protected? Is her family protected? There's nothing sadder than seeing people standing on the corner with a coffee can.
Right.
And doing the car wash. There's nothing sadder.
Or having to send out an email asking for help for a friend's plot.
Yeah.
Right.
Yeah. So let's kind of change it up a little bit. Sorry. No. So let's just look at it, the living benefits. There are living benefits. You can, if you have that permanent policy that accrues cash, you can pull cash out for yourself if you needed to. There's an accelerated benefits clause that if you have that, not every policy, so I'm going to caution you on that. Not every policy has it, but there's potential for an accelerated benefits clause so that if you were diagnosed with a terminal illness, you were able to pull cash out of your policy while you're still living to take care of medical bills, take care of your needs while you're still living. There's all kinds of wonderful living benefits associated with life insurance, not just the sad part.
Right. I mean, well, you have to plan for the sad part.
You do, absolutely.
But in your case, that was just, he was a great guy. So.
Yes, he was. Thank you.
Take over, Betsy.
Well, you know what? I think I was going to talk about what's happening up in the foothills.
All right, so we'll go a little bit lighter, and then we'll come back.
Yeah.
Okay.
Right.
About, Father's Day weekend, we have the Father's Day fly-in at the Columbia Airport. And by the time this airs, maybe it will be partly over. But we have the Tuolumne Lumber Jubilee coming up. We've got Wizard of Oz playing at the Fallon House for those people that like the community theater. But we've also got the waterfalls at Hetch Hetchy, some of the trails along Highway 108 that there's actually a book that you can get that'll tell you about the trails off of Highway 108. And
Don't you still
in
give that
Yosemite.
out? Don't you still give that book out to your clients?
I have to get some of them, but I did. I gave them out a lot.
I have one.
She
Yeah.
gave them all out already. Yes,
No,
we
I
get
have
more.
one. We still have it at our cabin.
One of my
We go
clients
through it.
actually is the author.
Yes.
Yeah.
All the trails up off the 108.
And
So
she's
it's a
actually
good
done a second book. Yeah. And the concert in the park starts in Twain Harte. And it starts this weekend and goes through August 31st. We've got all kinds of things, Railtown. But you know what is really cool is that we've got Tuolumne Adventure Trolley that's free on Saturdays. And it goes to Columbia, East Sonora, downtown Sonora, and downtown Jamestown. It runs from 8:30 in the morning till 10 at night. So you can get around and not have to pay.
Not have to Uber
Not have
it
to. Not have to.
or
we-
Lyft.
My son is a Lyft driver up there. I don't know how many Ubers we have up there right now, but
One Lyft driver.
yeah, my son.
Well, a lot
And
of
then-
them work for both of them now. Haven't you seen that? They have
Yeah,
both tags
they've got
in
the
their
tags
car.
on there.
Both.
Yeah.
Yeah.
Yeah, and you know what? And of course, if you're up there and you want to check out real estate, I've got a couple of listings. One on Marshall Way that's been reduced $35,000, and that's a brand new manufactured home with a garage. And Marshall Way is in Twain Harte Valley. We were talking about how warm it is down here, and it's about 15 degrees cooler up the hill. So if you want to escape
to
some
go
of the
up the
heat,
hill.
it's time to go up the hill.
Well, we were just talking about earlier, my cabin's going to be 20 degrees cooler than, down here.
Exactly. Well, you can be in Sonora and drive to Twain Harte, and they'll drop 10 degrees.
Wow.
I know. And of course, we've got all kinds of lakes up there, and the rivers are flowing. A lot of people are fishing right now.
Yeah. I mean,
Yeah.
those rivers are really flowing right now.
Yeah.
So be careful if
Yeah,
you're
be
going to get
careful.
into them because they're going to be really cold and really fast.
Right. And of course,
And
they're,
really
they're
deep.
stocking the ditch. There's a ditch system that runs through from Lyons Reservoir all the way down to Jamestown and out into the lakes, and they stock it with fish, and anybody can fish there.
Now,
Right.
Lyons Reservoir, speaking of that, that's one place that you can't swim.
Can't swim.
Your
Dogs can't go in.
can.
No.
You can go up to the top of Yeah, I've seen them in. You try to
if
stop
no
them.
one sees you.
No, but you just go to the point where the river is, right?
Right.
That comes right into it, and you get in the river.
Well, and the private lakes up there open Memorial Day weekend, and especially one of them was Twain Harte Lake, and I've got several Twain Harte Lake listings. One of them's coming up that's almost an acre and a half with 2 homes on it, downtown Twain Harte.
Nice.
It actually
Yeah.
backs up to the park where they have the concerts in the park.
Oh,
And did you
nice.
know that you can buy a second home up there for 10% down only?
Now I do.
Yeah, exactly.
Yeah.
Or you can buy if you're going to live there for USDA with no money down.
Here's another one, though.
I did know that.
5-bedroom, 4-bath, a block and a half from Twain Harte Lake with lake membership. Rents out for $330 a night. So
Yeah.
it's also an investment property. And that one is listed for $480,000.
Nice.
Yeah. And you know, if you're thinking about the future and you would like to know something about land and purchasing property up there and building for your future, I think Ed actually knows how to do loans on
Yeah, we can
buying
actually
land
take
and building.
Yeah, you can actually take a parcel and we can put either a manufactured home on it or a stick-built home all in the same loan at the same
Right.
time. You do it all at one time.
And land is abundant up there right
'Cause
now.
land's
Listings
really- right.
are fairly inexpensive.
Yeah, and the problem with the land is most of the time you got to put 50% down if you're buying it separately and not with something like that.
Right.
Nice.
Yeah.
Yeah. And then, did we want to talk about what you did last week?
What did I do? Oh, I was in a conference last week. What?
No, something else happened, right?
I don't know.
Your son?
He's not leaving yet. He's not leaving till July.
Okay.
My son doesn't leave for the Army till July, and then
There
that's
you
when
go.
boot camp starts. So we still got 2 weeks.
Yeah.
Congratulations.
Thanks. Yeah.
That's great.
He'll have a good time because he was not ready for college. He played the how many F's can I get and still get a C- to get out of high school? Yeah, he did.
Well, then maybe he can get a degree on the military.
He will. Yeah,
he
because they actually in the Army they have their own university. You can do it at your desk and all that stuff to start and all that. Plus the GI Bill these days for them is amazing.
Yeah, my brother did that. The same thing. He messed around when he was young. And then he got his degree through the Navy, and he just made commander.
Yeah, see, I did the same thing. I don't say I was messed around, but I got my bachelor's and master's when I was in. So, yeah.
Awesome.
It works.
Awesome.
Yeah. So when we get, we're not going to break yet, but when we get back, I want to go deeper into the life insurance. If there's anything else we missed on, is there anything you want to add to up in Tuolumne County for the next minute?
I could probably add all kinds of stuff.
Well, I know. Well, first, I mean, most people don't realize. I mean, now is the time to purchase up there because this is the season right now. I mean, it is so hot. If you want a property up there, you need to go up there, write the offer right now. Don't try to lowball it and get a good deal on it because you're not going to get it because now it's not there anymore, right?
Right, and it seems like I've had a lot of people ask about shops. We want a large garage. We want a shop. We want privacy. We want acreage. Mm-hmm. There are several listings up there that have really nice shops and really nice property, and under 500,000, under 550.
Right. I know a lot of people looking to move up there.
Yeah.
All right, let's go to break. Thank you for listening to Real Estate Jerky. We'll be right back after this break. Remember, you can listen to any of our shows through our podcast at iHeartMedia. You can find it on iTunes and Google Play, and you can go ahead and Google us at Real Estate Jerky and find us. We'll talk to you when we get back. All right, so we've only got about 10 minutes when we get back. So,
I didn't know if you wanted me to talk about the Women Who Rock thing.
you can I didn't
That's
say
next?
You can do whatever you want.
No. You're supposed to ask me about it.
It's not on my thing to ask you.
It is too.
No, it's not.
Ed,
Next page.
Betsy, when we went to break and you were going to tell us about your Women Who
Oh,
Rock.
well, that's on, I'm not there yet. I'm still on this getting out and getting back in. I go with the segment that's here.
You asked me what I did last week. I had a birthday.
Did you?
How old are you?
You're not going to say that.
Older than I was last year. We played CalDRE. We played.
All right, so we're going to talk about that, and then what do you want to add? What do you want to? So we'll have like 8.5 minutes after she does her thing. So what do you want? What did we miss in the life insurance that we haven't talked about? Was there anything we missed?
I want to talk about waiver premiums, basically.
Okay. So
I just kind of touched on that a little.
So what I'll
bit,
do is
but,
you'll do that, and then
You're going to ask me about.
I'll say about this, and then when you're done, what you can say to Pam, hey, what more should we know, or something like that, and we'll go right into that. Okay.
Okay.
Does that work?
Mm-hmm. Yeah.
All righty.
What year did you graduate? What year did you graduate?
81.
Okay. You're 2 years younger than me.
Oh.
I have my 40th class.
Expert info you crave. Real Estate Jerky on Power Talk 1360 KFIV.
And we're back with our final segment of the show. I'm Ed Parcaut, mortgage advisor at Lending for Living, and I'm here with my guest Pam Shelton-Allen from State Farm Insurance and Realtor Betsy Hurst-Younger, Century 21 Wildwood Properties up in Twain Harte. Betsy, before we went to break, and actually during break, we were talking about what's this Women of Rock experience you were talking about?
Oh, the Women Who Rock concert that I went to. I actually won a trip to Pittsburgh, Pennsylvania at our convention in March for Century 21. Mm-hmm. And it was at the McGee Women's Research Institute where they research women's health issues. And they sponsored a trip for my husband and I to go back there. 2 round-trip airfare, 2-night stay at the Hyatt, 2 VIP passes, and backstage access to meet Sheila E.
Ooh. Wow.
I know. One of the highlights, though, was when we got to go to the McGee Women's Research Institute and actually take a tour of their labs and meet their head doctor and listen to what they're doing and how they're researching HIV and contraceptive prevention in the same form and going to Africa.
Wow.
Yeah, it's big.
Yeah.
Very interesting.
And they're helping women in Pittsburgh
Wow.
with those also.
Very interesting.
What I did last week, you were but I actually went to a conference last week in Vegas,
Right.
and they were talking about what our industry is going to do and where interest rates are going, and we're going to be into where interest rates are going to be going lower over the next 6 months to a year than we've seen before, which is unusual. Yeah, I know you're looking at me funny.
What?
Yeah,
Did I refi?
yeah. Well, that's I'm just saying because what they're seeing and where everything's going is, and we're going to hit a recession. So
Yes.
there's nothing we can do about it. There might be some changes. So one of the things we're going to do on the show over the next so many weeks, we're going to talk about how to protect yourself in the upcoming recession, and they're putting that together right now.
Great.
Okay.
Wow.
Great. Yeah.
Awesome.
Yeah.
Well, because it's predicted it will happen, and we just don't know exactly when.
Right, because all the little signs are there, but the tariff things, other stuff that are there could actually keep us from going into that, but we won't know. It just depends. So we're gonna have some people come on the show talk about it and see
Hold
how
on,
we protect
everybody.
ourselves.
Here we go.
Yeah, but the one thing about it, most people are worried about, house prices are going to go down and all that. This time, no. I mean, there's only been 2 recessions where house prices went down. That was 91, 92. And then the Great Recession happened because of the homes took us into recession. That's what happened, and that's why values went down. So this one, they're looking at house values are going to continue to go up because rates are going down. That means things are going to be more affordable for people. People can buy more homes, and a lot of people go, "Should I wait to buy then?" And I can show you the cost of waiting for interest rates to go down versus the values are going to go up. You're going to lose. Buy now, don't wait.
Right.
Okay,
No, I agree.
you agree with that?
Oh, yeah, definitely.
And get life insurance right afterwards.
Right.
Protect yourself right away. Then get
Protect
that
yourself.
trust.
Yeah.
Make sure you have all the people in line because that's very important. So,
And,
Absolutely.
you've got to figure out who do you want to be in charge of your trust.
right.
Right.
And it's not always the spouse.
No.
Sometimes
your
it's your
kids.
best friend.
Or your
Sometimes
kids.
it's your boss. It depends. And it's not not always your kid.
Competent adult
Yes.
whom you trust.
Right. Somebody that might not be related to you.
My best friend, who's been a nurse for 30 years, is the one who gets to choose if I get the plug pulled.
Yeah. If I left that to my wife, it would definitely
Yeah.
be cool. So, she's a nurse.
If I left it
She
to
has
my son,
empathy, but no sympathy.
if I left
he's
it to
done.
my son, he'd cryo-freeze me till they found a cure.
That's a good idea.
So during the break, we were talking about what we should go over. And Pam, what else did you want to go over?
Oh, yeah. You were going to explain to us about waiver of premium, right?
Yes, waiver of premium for disability. So it's waiver of premium for disability means that if you should become disabled, the company would pay the premiums on your policy for as long as you're disabled.
Your company. Right, the insurance company.
Yeah,
Yeah.
the insurance company. Right, correct. Thank you for that correction. Yes, the insurance company that you have your life policy through would pay the premiums on your life policy for as long as you're disabled. So I was telling you earlier that I was fortunate enough to assist a customer last year in filing a claim on her waiver of premium, and it was on a term policy, and she was permanently disabled now. And so State Farm has paid the premium or will be paying the premiums on the policy for the rest of her life. And so it's no longer a term policy now. It is converted from a term policy to a permanent cash accruing policy. And she never has to pay another dime into it.
Was I not paying attention? How did that get converted?
She became disabled, and we filed the claim activating the waiver of premium for disability rider on her policy.
Is there a percentage of disability you have to be?
So a lot of it's going to depend. She's permanently disabled, so that's why State Farm's paying it permanently, because she's permanently disabled and she can't work. So they're paying 100% of it.
Wow.
So it's huge. And again, I'm going to go back to the age thing. Get it while you're young, and that waiver of premium for disability is tiny. The longer you wait and you want to add that rider on, the more it's going to cost, just like there's a cost associated with life insurance and how old you are. So that waiver of premium for disability is going to cost more.
And that has to be put on before you use it, of course. But, so how much would it be in the beginning?
A lot of it's going to depend.
Versus,
It
on your
depends.
age and everything else.
It depends on the age and the amount of the policy. It could literally be pennies.
Right? Okay.
That could literally be pennies.
So if you're a healthy person at 30 years old,
97 cents.
really?
I mean, like I said, literally pennies
Wow.
to add this on. So when I'm looking at someone who's young and relatively healthy, and you never know what's going to happen.
Right.
It could be an auto accident. It could be, you don't know. So try to, throw the bells and whistles on, make sure that your children are covered. Even if you don't want to get a policy on them, like I did for my grandson, throw on a rider. So they have something, so God forbid something should happen, they can get coverage. And then the other benefit of the rider is when the children get older, you can actually take that rider and roll it off onto a policy for the child. So there's all kinds of benefits like that. It's just a matter of, exploring the riders available on the policy, exploring the needs of the particular individual to make sure that everything's covered.
Wow.
Before I came here, I was telling my daughter what we were going to be talking about, and I told her, I said, haven't you noticed the new State Farm commercials? They're adding the fact and awareness that State Farm actually does write life insurance, not just our auto and your home, but you actually do.
Yeah,
I guess I got to watch more TV
yeah, and I
with commercials.
yeah, for nearly 100 years. Not me personally, but
Hey, I noticed on the thing here it says, Pam, what did you do last week? Well, I know you had a birthday. Was there anything else you did last week?
we celebrated.
All week?
It felt like it. It was wonderful. Although on my birthday, my husband brings flowers into me on my birthday. And then
So you were working on your birthday.
I was working on my birthday. And then my office manager brought flowers, and I thought, wow. And then my team member brings flowers to me, and I said, okay, stop. It's beginning to look like a funeral.
You don't get hay fever inside.
No, I had a birthday.
Yeah, no, exactly.
I didn't just get well.
No,
I know.
It looks
All right,
bad.
so we got about a minute and 45 seconds to go over anything else you want to add.
Okay, and you said something about, get the life insurance after you buy the home. I would say don't wait till you buy a home. Get it now.
Right.
Plan ahead. Get it while you're young.
The
Get it
younger,
while
the
you're
better.
healthy. While you're healthy,
Yep.
you never know what's going to happen. I'm going to tell you another brief story. So we had somebody who applied for life insurance, and they went through the medical underwriting. They went through their, so they did the phone interview. They went through the exam process, and then it was off to underwriting. And underwriting had it in their hands. Then he got into an accident and ended up in the emergency room. And when he's in the emergency room, they found a mass. So everything was done. Life insurance policy is issued. Thankfully, the mass is nothing, but get it done before you find a mass or before you find something horrible. Get it done.
All right. That's amazing.
I know.
Because things happen you never know about.
This
Yeah,
was a
life
great
happens.
topic. I hope we helped a lot of people.
I hope so,
I hope
too.
so.
Yeah.
And thanks again for coming on.
Yeah, you're welcome. Thanks for having me. I appreciate it.
Well, we really like having you on because it's a subject that's very important to people, and a lot of people don't look into it, and that's the
Right.
sad part. It's just like trust and everything else we talk about. You need professionals in your life to help you get through your life, right? You need these people. And just like myself, I go back through people's policies each year with their mortgages, right? What they're doing and where they are and what they should do differently, and most professionals do that. And I know you do that, Pam.
Yes, I do.
And I know you do that too also, Betsy, right? You talk to people all the time.
I talk to everybody.
All right, so it's been nice having you guys here today.
Thank you.
Thank you.
All right.
Can't wait to come back.